Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things that you need to know about if you're self-employed or running a small business. So one of the questions that we've been asked a few times now is, I'm self-employed, how do I pay my taxes? So that's what we're going to look at now. Before I move on to that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information should you require, as well as find information that we have available on a whole wide range of topics that will help you in your self-employment and running your small business. If you want to be notified as soon as we upload new information, then you should also turn on the notifications. So, how do self-employed pay their taxes? So if you're an employed person, it's quite straightforward. You will have your predetermined salary decided with your employer, and they will make all the deductions for your tax, national insurance and pension if applicable, and they just pay you what's left. You don't really have to worry too much about anything in the meantime. Your employer's dealing with that for you. But what happens if you're self-employed? So you obviously have your income coming in from your sales, and you have your expenditure to go out, and you have a profit, hopefully a profit and not a loss. But how do you pay tax on this? So the answer is fairly straightforward. It is by self-assessment tax returns. So depending on your trading style will determine which self-assessment tax returns that you need to complete. If you are a self-employed sole trader, for example, you will be completing a self-assessment personal tax return with the self-employment pages, potentially the short forms, which is a more simplified information. So in this instance, you will complete your self-assessment tax return, and you will notify the profit that you've assessed yourself from your income and your expenditure, and then your tax and national insurance will be determined from this. If you are trading as a limited company, then your company will be submitting a company tax return to determine the corporation tax that you must pay, and then any personal income that hasn't had tax deducted at source, such as if you are employed, obviously as a director, the tax will have already been deducted. But if you've had dividends, for example, they will be self-assessed and declared on your personal tax return. So this is how the tax system works if you are self-employed. So basically, you need to assess yourself, your profit, and notify HMRC of that so that they know and you know what your tax liability is going to be. Now, obviously the difference in this is quite vast. So when you are employed, you will generally be paid, say, weekly or monthly, and your tax is deducted and you just get what's left. When you are self-employed or running a small limited company, you are going to have to account for the liabilities throughout the time that you're incurring the profit. What I mean by that is you are actually going to get the profit and have that in your bank account, and need to make provision to make sure that that money is still in your bank account when you need to pay the tax. So let's look at a straightforward example, for example, of a self-employed sole trader. Let's consider the tax year 21-22. So that runs from the 6th of April 21 until the 5th of April 22. And of course, we may cut off at the 31st of March, but that's not really relevant for what we're talking about. So you are going to be earning profit, hopefully making profit for that whole time. And that profit is going to stay in your bank account. And then we'll get to the end of the tax year, 5th of April 22, and you will need to submit and pay your tax by the 31st of January 23. So if you imagine by that time, the profit that you earned way back in April 21, but you don't have to pay the liability until January 23, that's almost 2 years after you've earned the profit. So you can see some foresight's going to be needed to actually stop you getting in a little bit of a tricky situation, that by the time you come to need to pay the liability, that you have spent the profit and not kept enough money aside for it. So as we move more into the digital era, and more businesses are going to be required to be keeping their records digitally, and you will be using software, then it's going to be far easier. Keep that software updated on a regular basis, and it's going to be far easier then to keep a track of your liabilities. And in an ideal world, on a monthly basis, you would be looking at how much profit did I make this month, how much tax and national insurance am I going to be needing to pay from that, and actually pop that money aside. So in theory, that's a brilliant way to operate. In practice, it can be a little bit tricky, but at least if you do that, even if you're not always able to put the money aside straight away because perhaps your customers haven't paid, for example, then at least you're going to have an idea, and it's not going to be a massive shock, and you're going to be able to do some planning to make sure that you can meet the liabilities when they're due. So the question, to be fair, was specifically about how do you pay taxes, but one thing that I wanted to mention in this regard is that your self-assessment will cover your liability for tax and national insurance. But one thing that won't be covered as a self-employed person by any sort of statutory requirement will be pension provision. So if you are employed, the chances are unless you've decided to opt out, you will be paying into a pension. Your employer will be paying too. So just be aware that if you are self-employed, that you are only going to be, by default, assuming that you reach the national insurance threshold, you're only going to be contributing such that you will be entitled to state pension. So you do need to consider if there's any sort of further pension requirements that you need to make. So going back to the tax then, as we always say, if you're not comfortable with determining your tax liabilities yourself, if you need some help, then we would of course advise that you engage some support with this. And as we always say, if you're engaging somebody to help you with something, please do make sure that they're qualified for what they're helping you with, that they're ideally a member of a professional body, so you can ensure that the standards are high and that they have insurance. So hopefully this gives you a little flavour to how the self-employed are going to pay their taxes. I hope this helps, and as I mentioned earlier, please do take a moment to subscribe to our channel. Thank you for watching. Goodbye.